You just have to take a first step. You don't want to overwhelm yourself, which we all tend to do. We want everything now. But you have to start somewhere, and then you just keep building on that. You'll do something this year, next year you'll add to that, and you'll just keep growing from there. We all have to start somewhere.
Welcome back to the Jesus Coffee Yoga Podcast, where we talk about Jesus, coffee, and yoga, often focusing on business and helping you design the business of your dreams and a business that supports your life and your goals and not dominates your life. So in this episode, I have a special treat for you. Now, the previous episode, if you didn't catch it, Kristen and I talked a little bit about entity structures and LLCs, because that question comes up quite a bit. And I am not a tax advisor. I am not a lawyer. And so I have to preface everything that I say with, I'm not a tax advisor or a lawyer, so seek counsel from someone. Well, today I have my tax advisor on with us, and we're going to talk about taxes. Well, entities a little bit, but we're mostly going to talk about taxes and how you can best set up everything to minimize your taxes. And we'll talk a little bit about entity structure too, just to try to make everything the best that it can be to protect the wealth and the assets that you're creating and reduce your taxable income in ways that are not illegal and not even really pushing the envelope. There's just a lot of things that just for some reason, aren't commonly known, or a lot of tax advisors and consultants think that it's risky to do certain things, and really it's not. And so first I want to say, if taxes and money and all this stuff is a little bit overwhelming, and it can be, don't freak out. Don't let yourself get overwhelmed. You don't have to be an expert in any of this. Really what I'm trying to do is help expose you to things that are possible and encourage you to get help from a professional who can look at your picture and really create a unique, individualized plan that's just for you. And they're the ones who are the experts and know all this stuff. You don't have to be. You just have to have a basic understanding, and you're going to grow in your sophistication. I didn't know all this stuff even a year ago. I've learned a ton of this stuff really recently, especially working with Sherry. And so over time, you will build on this sophistication and can build your financial picture. You don't have to have like the perfect thing day one, which there really is no perfection. But don't get overwhelmed. Just listen with an open mind. Take notes on things you might want to ask a pro about, and then set up an appointment. And at the end, I'm going to share a link where you can actually set up an appointment with Sherry. If you're listening to this as it drops, you have a month about to set up an appointment and save a little bit of money and get Sherry's help with crafting a complete picture for you and your situation.
Yeah, I'll just reiterate on that. You just have to take a first step. You don't want to overwhelm yourself, which we all tend to do. We want everything now. But you have to start somewhere, and then you just keep building on that. You'll do something this year, next year you'll add to that, and you'll just keep growing from there. We all have to start somewhere.
Would you tell us a little bit about yourself and like how did you end up like where you are today?
Yeah, I've been working in private industry for most of my life as a controller for the last 20 plus years, and on the side getting clients just by referrals, and helping several of them start a business, grow a business, and save taxes. I've always been someone that likes to, help people find ways to deduct things that they're already spending money on. And so I have a couple of clients that were kind of getting to that point where I was going to figure out some new strategies because they were getting into making a pretty good amount of money and kept asking me, how can I not pay taxes? So, I've used all the things that are out there that normal CPE, continuing education classes talk about, and there are just not that many good ones out there at a certain level. So I went looking for some answers, and I found Mark on YouTube, and it just clicked. The way he structures things that I've been doing, but I learned a lot more. Took his certification, and I just got educated. And when you get education, there's just a lot of freedom and stuff that comes with that. And so I quit my job full time, and I started, doing my own practice on the side, started doing my own practice full time. And yes, we've just been growing since then. Just keep learning a lot each and every week, and excited to help educate other people so they can have the same advantages as, like Mark says, on Main Street as Wall Street does. So I'm excited to be here and help educate people and try to give some tips on how they can save taxes and grow.
Yeah, I love that. And I want to emphasize what the difference is between an advisor and just a preparer. So a lot of people probably have a tax preparer. someone who you give them your info and they process your stuff and file your taxes. That is not a tax advisor. That is someone who just, like, they don't really help you plan and strategize and come up with creative ways to reduce your taxable income. An advisor, on the other hand, really understands the full spectrum of what's possible and has experience in these different areas to know, oh, well, your situation, because of these things, and it's always so unique to your
Yes.
situation, right? And someone who can really understand the full picture of, well, your spouse has this going on and you have this business, and because of these other things, this actually makes more sense. Let's do this. And so I don't know if you have any thoughts to share too on like what the difference is between an advisor and a preparer.
Yeah, I mean, you can take H&R Block, for instance. You take your tax information into them, your W-2s and your business records, and they do the tax prep. They give you the tax return back and say, see you next year. That's not really the time that you should be thinking about how much your taxes are going to be. You should be doing that ahead of time, to try to make plans to reduce that again as much as you can according to the codes that are out there, which change every year in some way. And just kind of having some guidance throughout the year to help prepare for the taxes instead of waiting until it's time to file. And really having a relationship with that person. They get to know you and your, again, specific information, because there's no two situations that are exactly the same. Some things might work for one person, but not another.
Even for the same person, things may have changed in your life that something needs to change in your tax preparation as well. So just having someone in your corner who you meet with at least once a year, but hopefully even maybe a little bit more often if things change more than that, to help make sure that you're still headed in the right direction. And yeah, by the time you do taxes, like last year's taxes, it's too late to do anything about it if you owe more than you want. So being preemptive with things, and honestly, just quit being so lazy. Like I would fall victim to that. I'm preaching to myself here that sometimes it's just, well, I'm just going to do that later. And then you keep pushing it off, and then you accidentally push it off too long, and then there's nothing you can do about it. Like, let's quit being lazy, or let's stop being afraid, and let's do something about it preemptively.
Yeah, I think we're all guilty of that, right, in some way. And one of the things that I was thinking about this morning was like, if you don't act, then nothing's going to change. Even if you act and it doesn't go the way you expect it to, you can always fix it. There's always tomorrow.
And a personal story, I was going to share this at the end, but I feel like it fits here. As a DIYer, there's a lot of, I know a lot about taxes and things, but still there's a limit because I just don't live in that world. And I've breached that limit of what I should be doing myself. But rather than taking the time and spending some money up front to talk to someone like Sherry, because I think it was just before I had met her, I decided, I knew that I hit this threshold, and we'll discuss this thing in a minute about changing how you're taxed when you're an LLC. But it made sense for me to do this, and so I thought, yeah, for 2024 taxes, it's too late for 2023. I'm gonna go ahead and file 2024 differently to save some taxes. And I didn't realize we could have backdated that to 2023, and so I paid an extra $10,000 in taxes because I didn't take the time and spend the money to get professional help for my situation. So learn from my $10,000 mistake. And if you work with someone like Sherry, they will save you way more than you invest with them. And I view it as an investment because of that reason. They will help you save money on taxes.
Definitely, the amount you're going to pay for an advisor is going to pay off in probably tenfold, if not more, at the end of the day.
Okay, so I want to dive into the first part of our discussion, which I guess that was all the first part. Let's go into the second part of our discussion and talk about why own a business, and why, what are some of the benefits of at least establishing, and again, if you listen to my previous episode, what's called a DBA, or a trade name, or whatever they call it in your state. But you're operating as a sole proprietor, so you have permission from the state to operate a business, or an LLC, or whatever other entity that makes sense for you. Why do that versus just operating under your name? So maybe let's start with that.
You start with a DBA, like just a Schedule C on your taxes, a sole proprietorship. There's certainly things to write off there that you can, potentially you can show a loss on that Schedule C, and offset your W-2 income or whatever your situation is and other income you have coming in. But it allows you, first of all, to write off things that you're already paying money for: your cell phone, your home office, your computer, your internet, your travel, some of the things that you're already paying for. And because you use them in your business, you can write those off. And then from there, we can talk about this with the Schedule C, the self-employment tax that you pay. You pay 15.3% on everything you make at the bottom line on your business. And that also carries over to the limited liability company, which is not, as some people think, a way to save taxes. It's just a protection of your assets. So when you have stuff inside just your name, if something happens and you get sued, if anybody can come take all your personal assets. With a limited liability company, you're separating out that asset protection, your home, all of your belongings. And if something happens inside whatever that activity is in that LLC and you get sued there, they can only take what's in that LLC. They can't come after you personally because of that limited liability protection. So that's the main thing on setting up the LLC.
I would say, yeah, I totally agree. And the LLC part, where it can save you in taxes, is not the entity itself, but it allows you to set up some other things that might save you in taxes, but maybe not, because as a sole proprietor, you could do some of the same things. But so that's the whole point. You need to talk to someone like Sherry, because there might be times where it actually does save you in taxes because it enables you to do something you couldn't do without it. But
sure, yeah, absolutely.
So outside of like the normal expenses, obviously anything that you pay to operate the business offsets the income. And when we say write-offs, that's really what we mean is there's an expense or money that you paid that offsets some of the money that you made so that you pay less in taxes. And here's one bonus tip here. Like, I hate it when people will say things like, "Oh, I need more write-offs." And they'll just go and buy a bunch of crap that they didn't really need just because they need more write-offs.
Mm-hmm.
And that's like spending $1 to save a quarter. Like, that just doesn't make sense. So like, if you're going to buy it anyway, yeah, there might be reasons to move an expenditure like to this year instead of waiting until next year. But
right.
Please don't go out and just buy stuff that you wouldn't have bought anyways, thinking I just need the write-off. Well, you're wasting money.
Yeah, I think I have that conversation a lot with people. Yeah, if you're going to buy something anyway, if you're going to use it and you need the write-off this year versus next year, then move it into this year. But there's other ways, again, when structuring things properly, to take advantage of other write-offs. That could be, setting up a solo 401k inside of a business. That money is still yours. You can't touch it for a while, but it can be making money for you for later. That's just one example. And then other deductions, if you want to talk about outside of your normal business expenses, paying your kids. This is something that a lot of CPAs will say no about, but there's, other benefits as far as paying your kids as well. First, if they're at the appropriate age where they have appropriate duties, you can pay them to help you in your business. Not only does this give you a write-off, but it allows them to earn money, learn about business, be educated, kind of take over maybe one day for you, building your legacy, teach them work ethic. And not only do you deduct that off your taxes, if they're under 18, they don't pay self-employment tax, Social Security and Medicare. And so depending on where your state is and what your standard deduction is, if they make below that, then they don't even have to file taxes. Even if they're over 18, you can pay them to go, instead of paying for their, say, soccer dues, you pay them, deduct it, and then let them pay their soccer dues, things like that. So same thing with, people that are that have kids in college or just out of high school. They need some money to fix their car, or they need, money to go to the concert, whatever it might be. Pay them for doing stuff for you, and then let them pay for that expense.
Yep. And this is something that I started this year. And so my kids are young. Again, you're not trying to just shift income and just paying them for doing nothing. So I'm finding things they can do. So for me, I have an 8-year-old and a 6-year-old. And so I've kind of split the duties. The 6-year-old will help clean the bathroom in my office. So it's mainly just office cleaning and like shredding papers and stuff like that. But so he'll like wipe down the sink and clean the bathroom, and then he'll help me dust things or like clean the baseboard. It's just simple stuff a 6-year-old can do. And then the 8-year-old will vacuum and sweep and dust and kind of some similar things. And then they'll shred papers, and I can pay them a fair wage for that. So that's a deduction for me. And then they get it tax free. So we're in Oklahoma. What's the standard deduction for Oklahoma? Like
63.50.
So I mean, I can't pay them that much. Like
Yeah.
realistically, I probably pay them about $100 a month for what they do. But that's tax-free money for them too. Like they earn that income. They don't have to pay any taxes on that. And once we have enough to where I could set up a Roth IRA, because usually takes, there's like a fee for setting it up. So once we hit that threshold, we'll create a Roth IRA for them. And now they can put this money they've never paid taxes on into that account, and they'll never pay taxes on that when they withdraw it. So
Yeah.
it's a great way to get around paying some taxes on that money and to teach them, like you said, about business. And it's really giving them a chance to learn more about business and money. It's giving them a thirst and a hunger. And again, it's not about like life is about money and like I'm not raising kids that are materialistic, but I'm teaching them about work ethic and how to work hard and to earn what they get and not just give them allowance for doing nothing. So it's been really great. And they're asking questions, and they're, Dad, can I clean your office? I'm like, no, you just did yesterday. We don't need to clean it again. We'll do that next week. But it's just really opened some doors too for great conversations and teaching them how to manage money. And just to nerd out for a second, we created these jars. So we have a give jar, a spend jar, and a save jar. And so a certain amount, and the agreement with them is half of what I pay you guys is going in a savings account you just can't touch. And that's going to be for like the Roth IRA or maybe saving for a car, like the big stuff. And then the rest of it goes into this other account. And we use this app called Greenlight. So if you're looking for a way to like pay them and they have their own accounts, check out Greenlight. It's really cool. You have a parent app, and then you have like 2 kid buckets, and they get debit cards. So it's really easy to like manage it and transfer the funds. And so half goes into their spend. And then if they want the cash, we put them in those jars. And it's just been a great way to teach them. We don't just earn money just to spend it. And that's part of it. They're kids. They want to buy Legos and stuff, but they're also excited about saving and excited about giving. And they take the money to church and give. So it's been a great way to teach them that. So I didn't mean to spend so much time on that, but that's something I've focused on this year. And it's been a really cool experience so far.
I find people, adults that I've talked to, that wish that they had been taught that in school. And you really don't get that. And so this is a great opportunity to teach the kids about life and money.
And to let them make mistakes. So there are times where I'm like, I'm going to let them buy this thing and it's going to drain all their money when I know that they also wanted this other thing. And, I'd rather them make mistakes when it's so small, the stakes are so low, than when they're on their own and they buy that stupid Mustang, which I almost did, right out of college. But it was like, oh, I can afford the payment for this Mustang. Didn't really realize the insurance would be so high. And I forgot that I had loans that were deferred for 6 months. And once that kicked in, I did not have the money for that. So like, I really think God like protected me from making a really stupid choice. But anyway, just helping them like learn it when the stakes are low. You mentioned the 401k, and that's something that whether you are like not working full time and this is just kind of a side thing, or you're trying to grow it into something bigger, unless you have W-2 income with like a normal job, you probably don't have the ability to contribute to a 401k. Like everyone can contribute to a Roth IRA, and there's a certain amount you can do.
A traditional IRA too, yeah.
Yeah, or a traditional. But a 401k, I think you have to traditionally do it through an employer. But if you're self-employed or you have a business that doesn't have other employees, you can create a solo 401k. Now, if you have employees, you can still make it. You just have to make it available to everybody. But when you don't have other employees, you can create your own 401k. It's called a solo 401k. And you can even do what's called self-directing. And you can do this in a traditional IRA as well. But in either place, you can do a self-directed where you can, if you want, invest that into mutual funds and whatever. Or you can use that to do some less traditional things, like you can buy rental property. You can invest in other businesses. And so talk a little bit about that. Like what are some of the benefits too of self-directing?
Yeah. So, most everybody, even when you talk about self-directing in the financial world, they are mostly talking about, well, you can pick which stocks you want inside your 401k. true self-directing, and this is something that I've learned that I didn't know until a year ago, is you can self-direct. You can go buy practically anything you want, invest in anything you want inside a self-directed retirement account, rental property. And so say you're doing a Roth, your maximum contribution for 2024 is $69,000. Now there's some calculations and things you have to qualify for that, but you can put that into a 401k. It can be again a Roth or a traditional. If with a Roth, you build that over time. So you could buy a rental property. You could buy a piece of property and have it appreciate in value and sell it. That builds up your value, and your return is typically going to be more than what you would get in the stock market. It can be like 20% in a year, for instance, depending on what your investment is. And then with a Roth, when you take that out at 59 and a half, you don't have to pay any tax on anything that you've made in that. You can, look to Peter Thiel, who owned PayPal and Facebook stock inside of his Roth, and it's worth like $6 billion today. Mitt Romney, he did, those things and bought and sold companies inside his Roth IRA. And these is just an example of the things that the wealthy use that we, don't have access to or just haven't been told about.
That's key, that there are things that the wealthy have access to that we do too. It's just we didn't know about it.
Yeah.
And unless you work with someone who understands this stuff and knows how to navigate it and set it up properly, it's just not something we're taught or told. So we've talked about some things that are pretty common, and we've talked about a couple things that aren't as common. Do you have any other tips or thoughts on ways to save even more?
Sure. Yeah. So one of the things that you can do when you set up an LLC or do an S corp, for instance, is have a board of directors or a board of advisors. Board of advisors for an LLC, board of directors for an S corp. This has to be set up, kind of legally so that you've got some support for the IRS. But like a Microsoft, for instance, has their board of directors meetings, or people do offsite budget, planning meetings. Those things are deductible. So you can create board of directors for your entity. It could be your kids when they're old enough, because, with technology these days, they probably know more than we do. Then, or your best friends, your family, the people that, that you go to for advice on a regular basis. And you can have, travel write-offs, meal write-offs, other expenses for meetings, and having your annual or more than annual board of directors, board of advisors meeting, and be able to pay for and deduct all the expenses of everybody going there. Now, again, there's always rules with everything, so you just got to make sure you do it right.
Yeah, and that's something that I've this year have established. And what's cool is you can use it to write off some things you're already doing anyway. Like you had said earlier, sometimes you can shift things you're already paying, money you're already spending, and make it a tax deduction, or use pre-tax dollars instead of using after-tax dollars. And so this is one area that I set up. So once a summer, we go up to Wisconsin, where I'm from. And then throughout the year, we'll visit every now and then. And I've put my family, so my brothers, so my younger brother, my older brother are both, I trust them. They're smart. They're both in business. One has rental properties. The other one is a realtor. Like, I just trust their judgment. And my parents have some rental properties. So they are on my board of advisors for like multiple of my companies. So when I travel up there, I can write off the mileage and like the expense to get there. Like you had said, like a big company has like a big budget meeting or like an offsite and whatever. Like you can do that too, and the business you can make a vacation out of it, pay for some of it. Now you can't pay for like a 10-week or 10-day stay in Costa Rica, the whole thing, but your travel to get there, meals to get there, and then you can do for sure like one night, like overnight, like in a hotel or something, and then the rest might be on you. But there's some things that you can make that a tax deduction that otherwise you might already be spending anyway.
And the other benefit of doing that, especially with kids, and you can do this with teenagers even, is again teaching them business, and they can get excited about planning and having goals.
Because I think that's one way Mark talks about too, with his older kids or the teenage kids, or even in like their 20s and beyond, that they are on his board. And so anytime they need money, he can just call a board meeting. They can talk about business or whatever, and then he can pay them for that. And that way he's getting a tax deduction for money he's going to give them anyway.
Yeah, you can pay people to be on your board of directors if you want to. And, speaking of Mark, he talked about the family kind of dreading the annual board meeting. And so they went to somewhere nice. The hotel had a big sign, welcome, Mark Kohler company, whatever. And then they actually did the whole whiteboards and just did the whole thing. And it just got them excited about it. They were more excited about doing that than going and having fun at the end of the day. So that lasts for a little while anyway.
Yeah, that's really cool. So like for me, things to come. My kids are too little right now to do that, but looking forward to those times. You want to mention HSA, HRA?
Yes. So this is something that you can do even if you're not self-employed, if you have a W-2 job, if you have health insurance that has a high deductible, and I forget the exact amount on that for.
I think it's 3,200 or something, somewhere around there.
Yeah, it's gone up a little bit this year. So then you can set up an HSA. It's just a health savings account. You can do that on your own. You can contribute. I have my book around here somewhere, like $7,000 or so this year for a married filing joint to that, because we can't deduct most of our health insurance or medical expenses on our taxes these days because the threshold is so high. It's a way to pay that in. That's a tax deduction. And when you pay for out of there a medical bill, prescription, the chiropractor, some things that you don't get with insurance even, then you can take that out and pay that and not pay tax. So that's just an extra kind of like a Roth IRA and a traditional IRA kind of combined. So that's the HSA. And HRA is where you can basically have a reimbursement plan for all of your expenses. That's usually more for people that have high expenses when it comes to medical. But again, in the right situation and in the right structure, that's definitely a benefit.
Yeah. I just want to mention on the HSA that's not money it's not a spend it or lose it. Like
Correct.
What's the
Flexible
other
savings account that you have with your employer. Yeah.
Yeah. So it's not like a flexible savings account. It's money. You can invest it and you can even self-direct that.
Yes.
But you can put it in mutual funds or whatever. And, you want to keep some cash handy because one of the benefits is you're using pre-tax dollars to pay for things you were already buying or paying for anyway. So, you need some money in there to cover, regular stuff, but you also want to save for the future. I forget the stats, but I've heard Mark say that it's a leading cause of like bankruptcy, right? Like
medical. Yes.
Yes, is medical. So think about how many people get into their older years and maybe they had some retirement savings. Maybe a lot of people don't though. Like there's a really high number. I heard him say it. And again, I should have wrote it down because it was like 70+%. It was something really high. Actually have very little set aside for retirement, just in general. Then let alone people in their older years have health issues a lot of times and they don't have money set aside for that. Or if they did, most of that money goes towards that. And it really impacts their final years in life. And this is a way that you can set aside money and save for the future and build that up to cover, whatever health issues might come up down the road.
Yeah, and then you don't have to rely on the government. You don't have to rely on your kids. It just makes things a lot easier for you.
Something else that Mark J. Kohler had made me aware of is his approach to just your overall financial picture. And he has a really great way to illustrate this. And he calls it a trifecta. And I'm going to put this on the screen. Now, first, I'm going to say don't get overwhelmed by this drawing. And this is just an example. So here's an example of a trifecta. And Sherry made this just for this example. And would you talk us through like what we're looking at?
Sure. Yeah. So ideally, the basis for your structure, your assets, your businesses, all the things that are, your belongings, it should start with a revocable living trust. And you can, there's a will that's part of that. There's a lot of things. So if something happens to you, what are your wishes as far as how you want your estate distributed, who you want to be in charge of that. If you don't have that trust, even with a will, that has to go through court, through probate. And so you want to have all your assets, your rental properties, your ownership of your entities, your home, other things like that, all, in that trust. And again, when you pass away, then whoever you have appointed will make sure that your everything gets distributed and doesn't have to go through court. It can take a long time to go through and do all that. And it's just a way to it's kind of an asset protection, not so much as an LLC, but it just gets everything in there so it goes to where you want it to go at the end of your life.
Don't be freaked out by the idea of a trust, because I think growing up, we hear trust and like trust fund babies and stuff. Like we
Yeah,
just kind of think like it's only for the wealthy. And there definitely are certain kinds of trusts that are only for the wealthy. A lot of them don't make sense when you don't have a 10 million plus estate or whatever. But
right.
everybody should have a trust. I would say whether you're young, whether you're old, anywhere in between, kids, no kids, for all the reasons she just said, it helps you avoid probate, which is just huge. But not only that, you can get really creative with how your trust gets, or with how all your assets and things get distributed. So just for example, with our kids, we have provisions in there that if they're still minors, one, where do they go? Who gets them? So there's no arguing, there's no family fighting over it. Like it's spelled out in this document. And then we also have really creative provisions that if they're a certain age, the trust will take care of them financially. So not only would my brother or whoever get them, they will get money to help take care of them and support them. So they won't be a financial burden to them if both of us passed away when our kids are still young. And then you can say when they're a certain age, and you can get super creative. This is just what we did. When they're a certain age, they'll get some of it. Because do you want your 16-year-old to inherit $1 million? Like if let's say you have a life insurance policy or whatever. I mean, whatever it is, do you want them to get more than they can handle? No, a 16-year-old with even $100,000 is probably going to be really stupid with it. So you can say they'll get this amount at these stages. And then, once they're this age, they'll get more of it. You can add provisions like if they have a substance abuse issue. For ours, let's say that happens, we will support them in like getting out of that, but they can't get access to the money if they're like a drug addict, for instance. You can set provisions like they can borrow money to start a business, or we'll pay for their college. We'll buy them a first car, and a reasonable used car, not a brand new Ferrari or something. Well, however creative you want to be, you can spell out exactly what you want to happen. So I think it's just really important for everyone to have it. And it's not really expensive. It does cost some money. You need a lawyer, but it's totally worth it to save your family and your loved ones from having to go through probate and just the headache of it all. They're already going to be mourning the loss. Let's not throw other stuff on top of that to add more work and frustration and confusion on top of that.
Yeah, and I will say that, it's just a document. It's not going to change the way you file your taxes. It's why the 1040 is still down there. Like everything still flows through to your personal tax return. It's not until something happens to you that anything changes as far as that goes.
So why don't we talk through? So we've got a revocable living trust down here. Explain what we're looking at. What do we have here, especially with the trifecta, the three? Like what does that entail?
Sure. So we're just basically looking at one side here. So a trifecta basically consists of your operations, which is your business or your W-2, and then you've got the right side. Has your assets, any rental property or other assets that you have, and then you have the like pre-tax like assets like your 401ks, retirement accounts, and anything that you have going on in there. So we're just focusing on the operating side right now and talking about entities and setting things up, structuring things for tax benefits.
Yep. And if you can't read my writing because it's horrible, on the left side we have, like she said, the ordinary income or operating income. So ordinary meaning like a W-2, whether it's you or your spouse, or just like a 1099 if you work as a contractor for somebody, or if you just have a business, like it's your earned income. It's things that you do to generate income. And on this side, that says assets, whether it's pre-tax or post-tax. That's on this side. So the trifecta is 1 that side, 2 that side, and then 3. It all funnels down through your RLT or your 1040 for taxes.
So I'm looking at the full trifecta, and this is something I do for all of my clients, and also Mark Kohler's legal firm. They do the same. One or the other does it. And it just gives you a full picture of what your possibilities are and when you talk about what your goals are and a map to get there. And Mark has his inside of a book he carries around all the time. I think some people have it up on their wall just to remind them every day what their goals are and kind of how they're achieving those. So it's just a great tool.
What you helped me do was let's look at where we are today and let's make sure things are where they should be, and
Mhm.
some of mine were not. I had to readjust some things, and
Sure.
then let's look at where are we headed? What does the future look like so that we can move forward in the right direction and do it right the first time and not have to fix things.
Yes.
Just for a few examples on the asset side, what are some pre-tax things that we might have in that part?
Yeah. So you might have your Roth IRA. You might have your kids' Roth IRA, your solo 401k, your work solo 401, or sorry, your work 401k. Then, depending on how you're investing those funds, you might have an LLC owned by your IRA or 401k, where you have a rental property, or you could have crypto, you could have loan money and make a 10% return. There's a lot of things you can do there, but that's basically those retirement accounts where you're saving for down the road.
Yeah, and so that would be like a self-directed
Yeah.
LLC, and all those flow through to there, and then post-tax would be like your Roth IRA,
Correct.
or if you have
Not
rental,
deductible today, but not taxable later.
yeah,
Yeah.
and then you might have rental LLCs that are not in a pre-tax or self-directed. So this is what it could be. Why don't we look through? So under the ordinary operating income, so let's say today you don't have any of this.
Hmm.
They maybe their spouse has W-2 income, and our audience is largely yoga teachers and some fitness instructors. And so let's say they're just getting started, or maybe they've been operating under just their name. Like, what is their first step on this?
So on anyone's first step, I think operating under your name or a DBA is fine, right? Because before you invest money and you put a lot of work into something, you want to make sure it's viable, make sure it's going to make money, make sure it's going to accomplish what you want, and make sure it's what you once you get into it that you're happy with what you're doing. Once it becomes viable and you're making some money, at the very least, you want to go and create an LLC to get that and it's separated out for asset protection. As a single member LLC is kind of the way I would do it typically. It still goes on your Schedule C. It's still taxed the same way. So those, you'll see how it says net income, SE tax, that's self-employment, Social Security, Medicare. And that's kind of where you were talking about that $10,000.
Yeah.
On everything that you make on your net income, you pay that 15.3%. Now, the IRS does want you to pay some of that tax, right? So going from the LLC, you can convert that to being taxed as an S Corp. You're still an LLC, but now you're taxed as an S Corp. Again, you do that at the right time. Probably when you start to where your net income is around 40 to 50,000. Because now we're going to take some of that money, 50%, and as you grow, that percentage goes down, and we're going to pay you a W-2. So that's where it's talking about the salary for owners. And so let's say you made $100,000 in net profit in your entity. Then we might do $30,000 as a salary. That means you have $70,000 net profit coming into your 1040 from your S Corp taxation, and you don't pay any self-employment tax on that $70,000. So 15% of 70,000 is about 15,000. Sorry, that's not right. That's about 10,000 in savings on tax for just self-employment tax.
Yeah, so we're talking real money here. That once you hit that threshold, and again the 50-ish K, that's like when she says net income. So let's say you made $80,000, and it took $40,000 to make that. What you're left over before taxes, essentially. When you hit that 50-ish $1,000 range, it makes sense, because before that there's extra expenses, and that's why you don't want to just do it willy-nilly like I did with a different business. We filed way before we should have, and it wasn't helping us at all. It just cost us money because you need some kind of payroll processing system so you can pay yourself a W-2, and your taxes will be a little bit more complicated. So it costs a little bit more. So that's why there's that threshold in place that you want to wait till you hit, that amount. But again, it just depends on your situation. So talk to that tax pro, talk to Sherry, set up a call with her, and she'll help you figure all this stuff out.
Yeah, you'll see that we've got, the board on there for both of those entities. And you can do that for, if you have, technically if you have 5 entities, you can do that. There's also just some extra strategy behind that S Corp once you get that going. If you decide to get into some other businesses to kind of flow some things through there. And again, we're kind of getting a little more advanced there, but just just really the point is to talk to your tax professional, tax advisor, to make sure things are structured correctly to minimize your tax and honestly, how many tax returns you're filing.
Yep. Because some people like me will get an idea like, oh, I'm going to make an LLC for it. And like a serial LLC creator. And then you got to do a tax return for all of those. And everything impacts the tax you pay and the amount you'll pay to a preparer for all those returns that you need to file. And again, talk to a pro, because going to an S Corp definitely makes sense at a certain point. And it also changes some things that maybe you were doing one way and you need to do it slightly different way. For instance, if you're doing your home office deduction before you're an S Corp, it changes. And this is something I'm having to change this year. It's a little bit different. You can still take the deduction. It's just different. It looks different. You have to do it in a different way. And also paying my kids, like I can't do that through my S Corp, or well, I can, but I'd have to file a W-2 and then they're going to pay withholdings and all that stuff, which is not necessary. So you can create another entity. And I don't want to get overcomplicated here, but when you get to that point, this is the way you do it. You need like a family management company where that provides a service to the S Corp, and then that other family management company pays the kids. So there's still ways to do it. It just changes. And my point with all this is that you need to talk to someone who knows all of this, just to make sure that you're doing everything the right way, and that as your picture changes, you're doing all of it the right way.
Yeah, and as your situation changes, things make sense, and then having it more complicated. Obviously, we don't like to make things more complicated. But if that can save you thousands in taxes, then it's going to be worth it.
What would you say are some essential business practices that we should all follow, regardless of which path we take and what makes sense for us? There are some things that most people should consider as they're navigating this.
Sure. Yeah. I mean, first of all, you want to separate your business from your personal in every way. Separate bank account, use a separate credit card. You want to make sure and track your expenses. That can be on a spreadsheet. It can be through QuickBooks or Xero or any number of accounts that are programs that are out there. So you want to be able to show on a separate set of books like what your income and expenses are. And then also important is making sure that if you're self-employed, that you're paying in estimated taxes, state and federal, if it applies. And sometimes it may not. And so that's, again, where you talk throughout the year and see where you're at on what needs to be paid in, if anything. I think that's, basically for any entity structure that you have, from self-employed on the Schedule C to LLC to an S Corp, anything that you have.
That's important, because I was not doing that for a stretch. I was saving money for taxes, but I wasn't paying in quarterly. And so at the end of the year, I think it's if you owe more than 1,000, then you owe like penalties and interest. Like I got slammed with these fees. Like, what? I paid my tax. I wasn't late, but because I wasn't paying in when I owed over that threshold, I ended up paying extra in fees and interest on that.
Yeah, and it depends on, it's either 100% of your tax liability for last year or 90% of your tax liability for the current year needs to be paid in, whether it's through a W-2 or through an estimated tax payment.
Yeah, so don't mess around with that. Take care of it.
Yeah, and then I also say regarding LLCs, a lot of people go to LegalZoom and set up their LLC. That's a way to do it. It's a way to get started. There is definitely some better ways by really using an attorney to get that set up. You've got to file with the Secretary of State, get a tax ID. You need an operating agreement, a corporate record book. That also talks about your board of advisors and kind of legalizes that, I guess, for lack of a better word. You can set up an accountable plan for expense reimbursement. And then one big thing that everybody needs to know about for 2024 is the FinCEN beneficial owner information reporting. Starting 2024, anyone who has an entity filed with the Secretary of State, not your Schedule C or a DBA, but anything you file with the Secretary of State, you have to, if you start it this year, file that report within this year. They're giving us a grace period of 90 days, but typically it's going to be 30 days. If you already had an LLC set up or an S Corp set up prior to 2024, then you have until the end of the year to do that. So I want to make sure everybody understands that that's a new thing. And there is a $500 a day penalty for not doing that. There are a couple court cases out there where they're fighting that. And so we'll see what happens with it. But in the meantime, everybody just needs to kind of be aware of that.
And potential jail time too, right?
For like criminal, yeah.
Okay.
Type of acts, yeah.
Okay. So if you're not a criminal, okay, you probably won't go to jail. But
I mean,
still, I wouldn't mess around with it.
No, not at all. Don't get yourself into that situation. And again, it's just always good to be educated and prepared.
Yeah. And you can file that yourself. I can link to it if you really want to, but I'm a very, like I said, DIY guy, and my degree was accounting. Like I love all this stuff, but I would rather pay somebody who knows what they're doing, can just do it for me. So I know it's done correctly, and it just saves me time because I'm busy. So I would encourage you to find someone who can file it for you. Some tax people will. My previous tax person said they wouldn't, but when I'm doing some stuff with a lawyer to get my trifecta in order. So as part of that, they are filing that for me. So don't mess around. Do it yourself or hire someone to do it for you to make sure that you do it the right way and that you don't get in trouble.
Yeah, I will say just a little plug, I guess, for KKOS Lawyers or Main Street. They've got a few entities there. They can do that for you and file your annual reports and do your updated minutes from your board meetings and those kinds of things for, I think it's about $200 a year. And they take care of all that. It's a really good option.
Yeah, and so that's who I did mine. I'm doing all of my stuff through them, and then Sherry's handling all my tax stuff. They're really great to work with. My experience so far has been really, really good. And they're affordable. Like I've worked with other lawyers in the past, and it can add up so fast. And they've put together some really affordable and fair packages to get these things done. And that's one thing I'm going to have them do every year. They're just going to handle it, even though I can do it. I've learned my lesson, and I need to pay professionals to just handle stuff so I don't have to handle it, and I don't have to keep up with like the rules and all that stuff.
Yeah, I would say when you're looking for attorney, tax pro, anything like that, you don't want to go for the people that are charging the most money, because there's people that charge a ton of money, and it's just because they can or because people have money. It doesn't matter how much money you're making. Like, what is my investment in it? What's it going to cost for me? So you also don't want to go with the cheapest person, because then that's kind of the results that you're going to get. I think just being out there looking for somebody that just wants to help, still make money, but just I want to help people get started and learn the things that I've been learning. So
yeah, and I think you can find situations where it's a win-win, and I think you can tell sometimes in someone they're only in it for the money and they just don't care.
Yeah,
and you care, and KKOS lawyers care. Like they just want to do the right thing, and it's a win-win, because when you do things this way, yeah, they make money. They need to make money, but they will save you so much more in taxes. And there's one last thing I wanted to mention too, that having a lawyer set all this stuff up and even paying them to help maintain your corporate books and to file everything. How important is it? There's this concept of piercing the corporate veil if there's ever a lawsuit or something. Like, why does this really matter?
First of all, you have people that do things illegally, and that's definitely going to pierce the corporate veil. Do you want to make sure and cross all your T's and dot all your I's, make sure everything's legal, make sure everything's separate? It's going to show that you're a legitimate business. And if you're doing that, that's what protects that liability protection and protects your assets. And then, yeah, because people do make mistakes, that's going to happen. And it's all about intent and, degree of, infraction, I guess.
Yeah. So the intent, doing it the right way. And because you can get sued for anything. Even you can be totally in the right, not do anything wrong, and someone can sue you. But let's say just something did happen and someone fell at your yoga studio or got hurt and they are suing you. If you do things the right way, they cannot come after your home. They can't come after any of your other assets. Or if your spouse has a business, they can't go after that business. But if you don't do some of these things right, they can pierce. That's what that means, piercing the corporate veil. They can go beyond that LLC, your yoga business, to satisfy the judgment. And it can go the other way. Let's say your spouse has a business and something goes wrong there. And if they don't do something right, like, they can come after your yoga business. So it's important to do things the right way, just to prevent that.
Yeah, and it'll be money well spent, and they know what they're doing. Let them focus on their specialty, so you can focus on yours.
That has been my big revelation this past year, is just that. I'm going to stay in my lane, do what I do best. I'm going to invest. I don't even want to say pay. I'm going to invest in people who can help me do everything the right way and focus in. They can stay in their lane, and we all work together, and it's a win-win. So as we've been saying, you really need to get help from a professional. And we're actually putting together a special offer where you can work with Sherry and she can help get things set in the right order. So tell us a little bit about that.
Yeah, so I have a link we're going to share that gets 10% off of the consultation call, a 1-hour consultation, where we can go over a trifecta, kind of create a trifecta, go over your current situation, see, if anything needs to be adjusted, and then talk about what your goals are for the future, and come out of that meeting with a few things to start with, to start working towards, to save taxes, start building that wealth, and really protect your assets.
So I'm going to pop up a QR code here that you can scan that'll take you to that if you're on a computer. And I think on a phone, you can probably figure it out too. But otherwise, we'll put a link in the description. You can click on that. It'll take you right to that. So again, it's time sensitive. I mean, you can set up a call with her anytime, but that 10% deal is good for the next month or so. I think through the month of August, if you're listening to this as it drops. If it's beyond that, you can still set up a call with her. You'll just miss out on the discount. All right. Well, thank you so much for all this. I know this can be overwhelming. We covered a lot of information, and if you're not a nerd like me in this, maybe it's not so fun. But this stuff is so important. Guaranteed. What is it? How do they say that in life? You're guaranteed to pay taxes, and you're going to die at some point. So there's some things that are just a fact of life. So do what you can to lower your taxable income. Set up an appointment with Sherry. Do what you can to keep more of the money that you work hard to earn.
I look forward to working with anybody that's interested. I'm excited to help pass along the things that I've learned, and I will continue to learn, and hopefully get people excited about where they're going. So I appreciate you having me today. It was fun.
I love this stuff. So we'll probably have you on again, because I think we're going to get some questions from this, and maybe we could even do a live question and answer kind of thing. So
sure.
Thank you so much for your time. I really appreciate it.
All right. Thank you.
If it's your first time, consider subscribing. If you find this helpful and we helped you in some way, subscribe so you catch our future episodes, and share this with someone if you think you know someone who might benefit from this information.